Hello everyone and welcome to Managerial Accounting 1B. In this video we're going to be covering Chapter 17, which is about process costing. In Chapter 16, I hope you remember, we covered job order costing. So this is another method that we're going to be continuing to discuss. So the first thing we want to understand is what is a process manufacturer compared to a job order manufacturer. So a process manufacturer produces products that are indistinguishable or cannot be differentiated from each other using a continuous production process. So process costing is used by process manufacturers. This cost system records product costs for each manufacturing department or process. So unlike the job order costing, this is where we get an order and every order is unique and we calculate the cost for this order. In process manufacturing, it's continuous processing continuous manufacturing where there is no differences in the items produced from one time to another. And that's why process costing would be much more appropriate for that kind of manufacturers. So job order costing records product costs for each job using job cost sheets. So the following example or the following table would give us a comparison between process manufacturing companies and job order companies. So we have companies like PepsiCo, or the manufacturer of Pepsi and other soft drinks, Alcoa, which is an aluminum company, Intel, which is the computer chips that are available on all the computers we use, or many of the computers we use, Apple, which is the iPhone and the MacBook company, Hershey, which is the chocolate bars company. So all these companies, they're considered to be process manufacturing and they use process costing. On the other side, we have job order companies, things like Disney, where they produce movies and these movies are not identical. Every movie has its own process. Mayflower Transit, which is a moving service company. Again, every shipment is unique. It has different items, different destinations and things like that. And other companies. So you see other companies like golf courses, mobile homes, advertising. Every product in these companies is unique from the other. So comparing job order costing and process costing again, we can think about the similarity, or process and job order costing is similar in that each system record and summarize product costs. They classify, or it classifies product costs as direct material, direct labor, and factory overhead, which is the three main components for any product. Again, the direct material, direct labor, and factory overhead. It also allocates factory overhead costs to products, and it uses a perpetual inventory system for material, work in process, and finished goods. And I hope you still remember the difference between perpetual and periodic. In a perpetual inventory system, we calculate the cost of goods sold with every single sales transaction. But in a periodic inventory system, we wait until the very end of the accounting period and we calculate the cost of goods sold all at once. Another thing is it provides useful product cost information for decision making. So process costing and job order costing are different in several ways. And to see an example, I think, with a better way to be able to understand the difference. And here we're using the cost systems for Frozen Delight, which is an ice cream manufacturing company, and Legend Guitars, which is the example we've used before about a company that manufactures guitars. So here we see this example. So for process costing for a company like Frozen Delight, where all the ice cream production is the same, it's just a systematic process. They get the direct material, things like milk, cream, sugar, and then they use it, they mix it together, and there's some other factory overhead, there's labor involved, and that would lead us to work in process. And then we have another department, which is the packaging department. Again, we have labor, we have overhead, and there's also some material used here, which is the cartons or for the boxes. And then this would be where we have also another work in process account, and then finally this would go to finished goods in the form of ice cream. For Legend Guitars, it's different. Here you have different job orders, and here we have like the Maya series guitars, we have the American series guitars, and the Jazz series guitars. And each one of these is considered to be a different job and would have its own direct material, direct labor, and factory overhead. And at the very end, we'll have different batches of finished goods. So again, just to explain a little bit more, Frozen Delight accumulates the cost of making ice cream and work in process accounts for the mixing and packaging departments. And here we only had an example of 2 departments, just for simplicity. In other manufacturing businesses, it could be more than 1 department. And for each one of them, they would have their own calculations of the cost. So the product cost of making a gallon of ice cream include the following. We have direct material cost, which include milk, cream, sugar, and packaging cartons or boxes. All material costs are added at the beginning of the process for both the mixing department and the packaging department. We also have direct labor cost, which are incurred by employees in each department who run the equipment and load and unload product. And the factory overhead costs, which include the utility costs, things like the power and the depreciation on the equipment, and other overhead costs that we cannot really relate directly to the product being produced. So here we have in this exhibit the physical flows for a process manufacturer, and here we start with the material again. Again, this is we have the milk, we have the cream, we have the sugar, and then in the mixing department there's labor who put them together and they mix them and make it ready. And then the packaging department where they get the ice cream, put it in different boxes, and it will go out in the form of finished goods. So that's the physical flow for a process manufacturer. So I think this would give us an idea about the flow of the accounts. So let's try to go over them quickly and see how would that relate the cost flow for a process manufacturer, including for our example here, which is Frozen Delight. So in transaction A, the cost of material purchase is recorded in the material account. So we have a material account, which is part of our inventory. When you will buy these items, it's going to be debited. And then the cost of direct material used by the mixing and packaging department is recorded in the work in process accounts for each department. So you see here the direct material will go out into recording it by debiting the work in process, and it's going to be credited in the material account. So that's part B. You can also see that some direct material are worked in the packaging department. In this case, it's the cartons that are used in like packaging the ice cream. And then in part C here, the cost of direct labor used by the mixing and packaging department is recorded in work in process accounts for each department. So again, for each department we're going to have our direct labor, and that's going to be added to the work in process. And then in part D, the cost of factory overhead incurred for indirect material and other factory overheads such as depreciation is recorded in the factory overhead accounts for each department. So here we have the factory overhead accounts for the mixing department, for the packaging department, and you can see here it's not going by job, it's going by department. And we're going to debit the factory overhead for each one of these. So again, it could be indirect material, it could be depreciation, it could be other overhead like utilities and direct labor, insurance, you name it. And these will go onto the debit side. And then in E here, the factory overhead incurred in the mixing and packaging department is applied to the work in process accounts for each department. So we take them and we apply them to each department in the part of the work in process. So E here, we debit the factory overhead. And of course, we're going to credit the factory overhead accounts. And then in F, the cost of units completed in the mixing department is transferred to the packaging department. So again, the cost of the units completed in the mixing department is transferred. So you can see that the things that we mix here in the mixing department are going to go to packaging on the debit side, and that would be part of the work in process for the packaging department. So notice here, this is the only thing that's transferred from one department to another. And then in G, the cost of units completed in the packaging department is transferred to the finished goods. So again, and that would be in the form of cost of goods sold cost of units transferred in, and that would be credited to the work in process of the packaging department. And then the last thing, the cost of units sold is transferred to cost of goods sold, and this is where we debit the cost of goods sold account and we credit the finished goods. So again, this will give you an example of how the flow works. And I know it might be intense, but if you think about it, you can simply break it down to the material that's purchased, the overhead, and we put them into the work in process by department, and then it's transferred from one department to another. It's transferred finally to finished goods, and then once it's sold, it goes to cost of goods sold. So let's talk about the cost of production report. And this is important because we want to know how much is the cost we incurred for the production by department. So the cost of production report summarizes the production and cost data for a department as follows. We have the units the department is accountable for and the disposition of those units, and then the product cost incurred by the departments and the allocation of those costs between completed, or what we call it transferred out, and partially completed units. So two things we have to keep in mind. We have number of units and we have the cost. And these costs would also include the partially completed units. So the cost of production report is prepared using the following 4 steps. In the first step, we determine the units to be assigned cost. Then we compute the equivalent units of production, then determine the cost per equivalent unit, and then allocate the cost to units transferred out and partially completed units. So please keep in mind these 4 steps because we're going to cover them in more details in the coming slides. In each step of these, they have intense steps, so I know it might get confusing, but please go over them slowly so you can understand how we determine the units, how we compute the equivalent units of production, then we determine the cost per equivalent unit, which is the cost per item, and then we allocate the cost to units transferred out and the partially completed units. Notice here in step number 3, we said determine the cost per equivalent unit. We didn't say unit. And the reason we said equivalent unit because sometimes a partially completed unit would be an equivalent unit. And we'll talk about that shortly. So in the preparing a cost of production report, we are going to use the same cost flow of inventory methods. Things like the FIFO, LIFO, average cost. But again, for purpose of simplifying these things, and I'm sure in 1A or in financial accounting, you already studied first in and LIFO and FIFO and the weighted average. So here we're just going to assume we're using FIFO just to simplify the process for ourselves. So again, like merchandise inventory, costs can be assumed to flow through the manufacturing process using the first in, first out, or the FIFO. Could be last in, first out, which is LIFO, or the average cost method. So again, because the first in, first out FIFO inventory cost flow method is often the same as the physical flow of units, the FIFO method is used in this chapter. So again, because we want to simplify things and we know that this is usually how the process works. So the July cost of production report for Frozen Delight would be as follows. So we have the inventory at the beginning of the year. We have 5,000 gallons. So the direct material cost for the 5,000 gallons were $5,000. So assuming like we had the material already included. The conversion cost for the 5,000 gallons, it was only 70% completed. Okay, and this would include things like the labor and the overhead. So that was 1,225. So the total inventory in process, again, that's not completed yet. That's inventory that we started with, is 6,225. The direct material cost for July, 6,000 gallons. Let's say, assume that we use 60,000 gallons, were $66,000. And then there was the direct labor cost for July, 10,500, and factory overhead applied for July, 72.75. So the total production cost to account for is $90,000. So please keep these numbers in mind because we're going to use them in the future. And then we're going to see the gallons transferred to packaging in July, which is about 62,000 gallons. These were the gallons that were ready to be packaged and put together for sale. but we still had work in process, inventory in process of 3,000 gallons. These were only 25% completed. They need 75% more to get completed in the month of August. So we only completed 25% of the 3,000 of gallons that we had. So again, let's focus on step number 1 here. Okay, and the first step is to determine the units to be assigned. So a unit can be any measure of completed production, such as tons, gallons, pounds, barrels, or cases. For frozen delight, a unit is a gallon of ice cream. So that's the unit we're going to be using, which is a gallon of ice cream, assuming that's our measuring unit. So the mixing department is accountable for 65,000 gallons of direct material during July. And how did we compute that? It's as follows. So we got in process items where they had material of 5,000 gallons. And we received material from storage to be used for the production during July was 60,000 gallons. So the total units or gallons accounted for were 65,000 gallons, which is 5,000 in our beginning inventory, which is coming in process from the month of June, and 60,000 material that were received in the month of July, for a total of 65,000. So let's try to split these into 3 groups. So for July, the following 3 groups of unit gallons are assigned cost. So group number 1, these are the units in beginning work in process inventory on July 1st, and these were the 5,000 gallons. Remember, these are the ones that we brought forward from the month of June. So we had them in June, they started working on them, they were only 70% complete, but they're still missing. So we had 5,000 gallons involved in that. And then we have units started and completed during July. Remember, we received 60, but we didn't complete everything. We only completed 57. So started and completed in July, 57,000. So that means that it transferred out to the packaging department, because the 5,000 by the month of July were completed, and out of the 60,000 gallons that we used or we were transferred to the mixing department, 57 were completed. So now 62,000 were transferred out to packaging in the month of July. That would leave us with 3,000 out of the 60. Remember, the 60, now we have 57. I'll go back here to remind you. The received from material storage were 60. 57 were completed and transferred to the next department, which is the packaging department. So that made it 62,000 gallons were transferred to the packaging department. And 3,000, they're still in process. They're going to be completed in August. So the total units of gallons to be assigned cost are 65. Okay, again, 5 from the beginning, 57 were completed, 3 are still remaining, so that would make a total of 65. Remember, the 3,000, these were only completed 25%. So I think this would give us a better understanding of the whole picture. So July units to be costed for the mixing department. Again, remember, we started with 5,000 gallons. That's our beginning inventory, group 1. That was moved forward to us from the month of June. Okay, we started working it in June, but we didn't finish it. We didn't send it to the packaging department yet. Why? Because they were not completed. They were only 70% completed. And then we got 60,000 gallons, 57 and 3. 57 were completed. So these were received and completed in July. And 3,000 were received, but were not completed. This is part of our ending inventory for the mixing department. So please keep in mind these 3 groups. We have 5,000, 57, and 3,000. The total 65 gallons will be assigned some cost. Right, so let me stop here. In the next video, we're going to see how we're going to do step number 2, which is compute the equivalent units of production.